Hello everyone. How are you? Hope you are good. We are continuing the income tax amendment class, and today we will look at the amendments in income tax related to the capital gains. Right and capital gains have the most of the amendments. Let's start this. The cost inflation index for 24-25, which is previous year. The cost inflation index is always in reference to the previous year. We are discussing about assessment year 25-26, so previous year 24-25 cost inflation index is 363. How much was it before? It was 348 of the previous year 23-24, and it has jumped to 363. But when you will read further, you will see that the whole concept of indexation has been eliminated. After a date, the concept of indexation has ended in the previous year 2024-25. So references to indexation will be very rare now. You will find it in very few places. Right, its use will be very limited. But still, it will be used somewhere because you are still learning. The cost inflation index for previous year 24-25 is 363. Capital asset. Whether we call it long term or we call it short term, it used to depend on the holding period. With respect to some assets, if it is more than 1 year, then it is long term. 2 years or more is long term with respect to some assets, and for some assets, if it is 3 years or more, then it is long term. The 3-year criteria has been removed, it is eliminated. The 3-year and 2-year criteria have been merged. This means the 3-year criteria, which was considered long-term for some asset, they have been merged with those assets that were considered long-term after 2 years. Right, let me show you. Where the changes will be, I will highlight that. Now let's take a look at the entire capital asset. Listed securities. Listed securities, whether they are equity or preference debentures. Listed securities are those securities that are listed on a stock exchange, whether it is equity or preference debentures, if it is listed on a stock exchange. So how does the bifurcation of short term and long term happen? More than 12 months. If it is 12 months and 1 day, then it will be long term. If exactly it is 12 months or less, then short term. Okay. UTI units. Even government securities, if they are listed, then also they fall under same category. So the first thing you need to remember is listed securities. The second is UTI units. What is a UTI unit? Mutual funds of UTI. I have told many times in my classes that why we don't say mutual fund as mutual fund. And why do we say it as UTI units only? Basically, this is a separate preference, or you can even say that a separate value is given because UTI was the company that first launched mutual funds in our country. And that's why they named it as UTI units. So then later on, all of the companies copied the same concept. But the name they gave it was mutual fund. So for the rest of the people, we call it a mutual fund. But when it is issued by UTI, we call it UTI. Units. Okay? This means that they started around the 1960s. So that was UTI units, then equity-oriented mutual funds. Now do you know what is an equity-oriented mutual fund? If a mutual fund company invests 65% or more of its money in equity shares, so then it is called an equity-oriented mutual fund. I will repeat it again. If 65% or more money is invested in equity share, if a mutual fund company invests money in domestic companies, what is such a mutual fund called? An equity-oriented mutual fund. Okay, so if it is less than 65%, then it is what? It is called a debt-oriented mutual fund. Right? In fact, debt-oriented mutual fund was not a term in our country. It was called equity-oriented mutual fund, or other than equity-oriented mutual fund. If 65% or more money was in equity, then it was called equity-oriented or other than equity-oriented mutual fund. Okay? Honorable Arun Jaitley once presented the budget. And while presenting, this word was first used, debt-oriented mutual fund, and since then we have also started calling it debt-oriented mutual fund. Zero coupon bond. And for the zero coupon bond also, the criteria is of 12 months. Then same 12-month criteria applies to these 4 assets: listed securities, UTI units, equity-oriented mutual funds, and zero coupon bond. Now coming to unlisted equity and preference shares. Please pay attention. Unlisted doesn't mean all. In listed there was equity. I will highlight it. In listed there was equity and preference. But here in unlisted we are only discussing about equity and preference shares, and what else is left. This is left, right? Debentures and government securities. If this is unlisted, then if this one is unlisted, then you know which category it will fall into, the third category under other assets. So in listed we have equity, preference, or debentures, government securities. All of these fall under the first category. If it is unlisted, then equity preference will fall into category 2. And if it is unlisted debenture or government securities, then it will come under the third category, other assets. Land and building is in the second category. Besides this, all the other assets will come under the third category. So in the third category, there are unlisted debentures, government securities, and besides that, all the capital assets. Like if it is jewelry, where will it come under? It will come under other assets. So every other capital asset will come into the third category. Okay, now what has happened? See. For the rest, 3 years or more is considered as long term, but this date, 23/7/2024, remember this date. This is such an important date for capital gains that this 23 July 2024 date will come up again and again. Can you remember this date? Don't forget this date. If you forget this date, then the entire capital gain is gone. Okay? This date will be useful in many places. 23 July 2024. Remember it. 23 July 2024. Not 3 years from 23rd July 2024 if you sold the jewelry after 23rd July 2024. 23rd July 2024 or after that. From 23rd July 2024. If you are selling jewelry, then you will see 2 years. If the holding period is 2 years or more, then it is long term, otherwise it is short term. That means these two are getting merged. From when? These are merging from July 23, 2024. Okay, 1 second, give me 1 second. There is a mistyping in this. This is 24 months here. Right, this is 12 months, below is the 24 months, and this was the 36 months. But July 23, so this means that in this financial year, if you have sold a capital asset from 1/4/24 to 22/7, 24. Okay, so then what will happen if other assets are sold within this period? If the sale period is between these days, then it will be called as 36 months or more than 36 months is considered as long term. But if it was sold one day after this date, it was sold on 23 July 2024, then on 24 months it will be called long term. Did you understand or not? Let me take an example. You bought jewelry on 15th June 2022 and you sold it on 20 July 2024. Okay. How long was this period? A little more than 2 years. Yes, it has been a little more than 2 years. Is this long term or short term? Is this long term capital asset or short term capital asset? Meaning when this jewelry is sold, will it be long term capital gain or short term capital gain? This will be a short term capital gain because this is a short term capital asset. You will ask, how is this happening? Is there a doubt? This is a short-term capital asset. This is because before 23rd July, if the holding period was 3 years, 3 years before 23 July was considered holding period, jewelry was considered in other assets category. If it was more than 3 years, then what? Then it is long-term. That's why this is a short-term capital asset. Let's discuss about the second thing. On the 25th of June, you bought it on 25th June 22. Okay? Let's make it 20 June. You bought on 20 June 2022. And you sold it on 25th July 2024. Are the number of days the same? Yes, they are the same. Look, we have moved the purchase date 5 days ahead and we have moved the sale date also 5 days ahead. Now, is it short term or long term? The duration is the same. The holding period is also the same today. Right? But now here this will be long term capital assets. Why? Because on and after 23 July, if you hold it for 2 years or more, then only a capital asset will be a long-term capital asset. So now I hope that you understood. Okay, so firmly fix the date of 23 July in your minds. Okay? So, shall we exactly write 23 July here in this example? Let's do an example with the date 23 July, okay? So we understand it better. Let's say purchased on jewelry. We are talking about jewelry. Purchased on. What will be the date? 15/6/22 and 23rd July 24. What will this be? Long-term capital asset. We will now look at 2 years. From 23rd July and before 23rd July, we used to look at 3 years. Let's say it was sold just one day before on 22 July 2024. This was bought on the same date. What will this be? This will be a short-term capital asset. Now you have the clarity. There is no problem, right? So, which assets come under the third category? You know this, right? The other assets will come under third category. These will be applied on what in the category of other assets. This is more important because the rest 2 years or 3 years is the same. Under the category of other assets, first is unlisted. Bonds and debentures. Okay? Unlisted. Government securities. Okay? Debt-oriented mutual funds. Jewelry. This all will come in it. And for this, you need to pay attention to the date. Okay? For land and building, do you need to pay attention to the date? No. Do we need to pay attention to listed securities? No. Those are all in the first and second category, right? You don't need to pay attention to that because those are same as they were before. Okay, so now let's move on to the tax rate. And there are big changes in the tax rate also. Okay? But I am going to explain in a summarized way that what the government has done. Exactly, it is not the same. When we will read in detail, there will be some more differences. But I will give you a crux as to what the government did. Look, earlier the government on long-term capital gains, previously what used to happen, old. Let me explain you. It used to take 20% tax. Now it takes 10% tax. Okay, it used to be like this. It used to take 20% tax under which section? Under section 112. And in this, it used to take 10% under section 112A. Okay. What is 112A? STT paid. Where security transaction tax was paid, 10% tax was levied on long-term capital gains. And for transactions where STT was not paid, 20% tax was levied. Now where is STT paid? STT paid is applied on two things. On what security transaction tax is applied? If an equity share or an equity-oriented mutual fund is transferred through the stock exchange. Remember it, if you did a transaction of equity shares or an equity-oriented mutual fund through the stock exchange. Which companies are on the stock exchange? You can only transact through the stock exchange for listed companies. An unlisted company which is not listed on the stock exchange, can you transfer through the stock exchange? No. So let's say you have a share of Study at Home Private Limited. Okay, you have Study at Home Private Limited shares. So will STT apply to this? It will never apply. It's not like. It can never happen. It is possible that it will be listed in the future on the stock exchange. For now, the security transaction tax cannot be applied to it because its transaction will not happen through the stock exchange. Is that clear to you? Now coming to Reliance company, it is listed. Reliance is a listed company. Is the STT tax is always applied when you have done a transaction and sale? That is not necessarily the case. It is possible that we sold it through the stock exchange, or it is possible that we sold it directly to you. Can we sell you shares directly without going through the stock exchange? The answer is yes, it can happen, but generally no one does it. We will go directly to the stock exchange and sell it there. Why would we sell it personally to anyone? Right? For example, let's say I have 100 shares of Reliance company and you want to buy it from me, but that doesn't happen practically. I'm explaining it again and again that it doesn't happen practically. Okay, you will go to the stock exchange and buy. I will also sell from the stock exchange. Why would I sell to you and why would you buy from me? Everyone has a demat account. Everyone will buy directly from their own demat account, but this is actually possible. So if you want to buy from me, you can buy. Okay? I can transfer the shares from my demat account to your demat account. Okay, this is possible. This can happen, right? But in this transaction, will the STT be paid? No, it will not. If the STT is not paid, then which capital gain will apply? 112 will be applied. 112A will not be applied. Okay? So you have to understand carefully that if there are unlisted shares, then there will be no STT, but if they are listed shares, then STT may be payable or it may not be payable. STT will be applicable only when the transaction happens through the stock exchange. And practically this is what happens. Okay, but there is no guarantee of the exam. In exam, non-practical questions can be asked. It may even ask that Mr. A sold shares to Mr. B. Not via stock exchange, okay. So you will understand that in this case, the security transaction tax payment would not have happened. this was the case. What has the government done? The government states that now none of this matters. They will take a 12.5% tax directly. They will take 12.5% tax directly. Okay? Means 20%. So this 10%, 20% is all over. On long-term capital gains, directly 12.5% tax will be taken. Okay? Now you will say there is a benefit. There is a benefit. What is the benefit? This 20% is now 12.5%. Even though the government is charging 12.5% on 10%, there is a loss here. There is only a small loss, but the 20% is now 12.5%. No students. There was a huge uproar in parliament about this. As soon as the government brought this up, Rahul Gandhi immediately questioned it. Okay? Whenever I talk about all this, don't assume that I am talking about politics. It is important to tell you this. If I don't tell you this, you won't understand that there must be some catch in this, right? If this is such a good thing, why would the opposition party oppose it? Okay? Let me explain. So when 20% tax was applied on 112, then indexation was applied on this. Indexation means the effect of inflation. So the cost of acquisition increases here if the indexed cost of acquisition increases. Then capital gain will be less. 20% tax was applied on a lower amount. This 10% was without indexation itself. So on this there was no indexation. Meaning there is no relation to inflation. Well, it's simple. 10 years ago, if I bought a property for 1 crore rupees, and today I am selling it for 1 crore 10 lakhs, so am I making profit? No, there is no profit. Instead, I'm at a loss. 10 years ago, I bought it for 1 crore rupees. If we consider the effect of inflation today, do you know how much it will be? It will be worth 2.5 crore rupees. And selling it for 1 crore 10 lakh rupees is a loss. So earlier the effect of inflation was considered in 112. Okay? Now inflation effect is not considered by the government. Inflation is increasing, and if they consider inflation effect, the government would get nothing. The effect of inflation is over. 12.5% tax will be levied. That means if we bought a property for 1 crore rupees 10 years ago, if we are selling for 1 crore 10 lakh rupees today, then according to government, we incurred profit of 10 lakh. Until now, there was no profit. Why? Because inflation had increased more than that. Now, according to the government, we made a profit of 10 lakh rupees, so pay tax on that. Is everyone understanding this? So in the case of jewelry, in all of these, this used to happen. The indexation benefit was available. The cost of acquisition used to increase. And because of this, the capital gain used to be less, so it was 20% on it. The government has removed indexation, and this 12.5% levied by the government, this has been done without indexation. This is what I was going to tell you, that the government is ending the concept of indexation. Okay? Now I will tell you what was the commotion that arose in parliament, because of which you must have seen many changes had to be made. The government was doing this. But now when I'll teach you about law, you will see that there are many twists in it, and it is all over the place. And why is it like that? It is because of the opposition party. Now the opposition party here, what do they say? They say that if in the properties, if you will not give indexation benefit, then the entire amount of black money will start circulating in properties. Now, what will the people do? They will show their property at the same price they were selling it before. Why so? Understand this. For example, 10 years ago, I bought a property. Listen carefully to me. I don't need to teach you all this, okay? Because you have to give an exam. We can just talk about the important things and leave. But you won't understand because there is so much twist in the law. You will say, why is this different here in the land and building? So for the sake of clarity of the concept, I am explaining. Listen carefully to what I am saying. 10 years ago, I bought a property for 1 crore rupees. Today, I am selling that property for 2.5 crore rupees. If we look at it broadly, then earlier, tax was not applicable. Because of the effect of inflation, let's assume that the effect of inflation indexation was done, and roughly, indexed cost of acquisition is 2.5 crore rupees. Or let's assume 2 crore rupees. Bought for 1 crore and sold for 2 crore. Okay? Roughly speaking, after applying the indexation benefit, how much is that 1 crore property? It is 2 crore, the index cost of acquisition. So, how much capital gain will be? Nil. When I was selling a property for 2 crore to someone, then I took the entire amount in white, and there was no need to take cash, transfer the entire amount to the bank because I don't have to pay any tax. A property worth 1 crore has become worth 2 crore, even with inflation. I sold it for 2 crore rupees. There was no profit. I don't have to pay any tax to the government. So, 2 crore rupees was deposited in bank. Now the government is saying they will remove the indexation. The government said they will remove indexation. What does it mean? 10 years later, we will sell a property worth 1 crore rupees in 2 crore rupees, or maybe more than that. But I won't transfer 2 crore rupees in bank now. I will take as black money. I will take little more than 1 crore 10 lakh or 1 crore 20 lakh in the bank. And the rest 80 lakh rupees, I will want this money in cash. So that we can show the transaction that this property was sold in 1 crore 20 lakh and we don't have to pay tax. If property worth 1 crore was sold for 1 crore 20 lakh, then 20 lakh is profit, so tax will be paid on 20 lakh. And if we show that we sold it for 2 crore rupees, then we have a profit of 1 crore rupees. So 12.5% tax will be levied on 1 crore rupees. Modi ji will take 12.5 lakh rupees. Did you understand? So opposition party said that the government is increasing the black economy in our country because the black money will also go into property. Right. The government must have also felt that the matter is true and the issue has been raised too much. Okay. So who has the black money with them? It is with rich people. And you know the opposition party always says that whose government is this? I'll not answer that. Okay. So they were implying that this is the government of the rich, this is not the government for the poor. And in the country the poor are more. This will mess up the vote bank. So the government immediately brought a twist there, and now let's see what the law is. Did you understand that there will be a slight twist in the law, specifically regarding land and buildings? Otherwise, what is the tax rate? The tax rate is 12.5% without indexation. Clear? Okay. So, the tax rate on capital gains. First of all, we will discuss section 112. What is section 112? STT not paid. Long-term capital gain other than long-term capital gain taxable as per section 112A. And mentioned in 2 below. There is also some concept below. Okay, we'll see what is it talking about. Other than 112, meaning that? That one. Leaving that STT paid one. Okay, now you can ignore what is written in the bracket. Long-term capital gain. From transfer of capital asset which takes place before 23 July 2024, before the 23rd of July, meaning until July 22. July 22, 2024. That's why I was saying remember the date of July 23 for all capital gains. The law changed from July 23. So here we can write as it's talking till July 22. What was until July 22nd? 20% tax was applicable with indexation benefit. Earlier it was 20% index we explained and no effect of inflation, that is indexation. Now let's see what was next. From transfer of capital asset which takes place on or after 23 July 2024. What will happen from July 23, 2024? It is talking separately about the transfer of land or building, and it will talk separately about the rest. Why land and building? You know opposition party, right? From transfer of land, building or both by an individual HUF being a resident acquired before 23 July 2024. Before July 23, 2024, the purchase of land or building, which was sold after 23 July 2024. Okay, alright. So, if we are buying or selling after 23 July 2024, it is not talking about that separately. Listen very carefully. What is this talking about? On those properties that were purchased before 23 July 2024 and sold after 23 July 2024. That is, if both things happened before 23 July 2024, then. So this is not the law. So students, listen very carefully. Here this is the date for the 23rd of July. Wait. This is an important point discussed here. This is a date 23rd July 2024. Okay, now, if the purchase is happening here and the sale happened after this. This is the law that is applicable, the one we are going to teach now. So now let me tell you that if it meant to say this date is of 23 July 2024. It was also bought before, it was also sold before, so on this. Okay, let me remind you that this is not the law that we are going to teach now, okay? Okay, so the date of 23 July 2024 is this. It had also purchased land and also the building from here, and the sale was also done after this. It could be that the land was bought after 23 July and sold after that. So even then this law is not applicable for it, understood? Students, you should pay a lot of attention here. What does it say? From transfer of capital asset which takes place on or after the 23rd of July. From transfer of any land or building or both by an individual which is being resided, that is acquired before the 23rd of July and sold after 23rd July. Both things are important. Then this law be applicable, what is it? Lower of 20% with indexation. Take out 20% with indexation tax or 12.5% without indexation. Now look, what did the Modi government say? The Modi government said they will not give the inflation effect. Okay, 12.5% without indexation, that's what they said. Okay, what was the previous tax? It was 20% with indexation. Okay, when the opposition party took over, so the government said give the lower of the two. Meaning you understand, you take out two taxes. Take out 20% after applying the inflation effect. Now without effect in inflation, calculate 12.5%, and whichever is lower, that is the tax we'll pay. Do you understand why this happened? The rest of any capital asset in the rest of any other capital asset in 12.5% without indexation. See, in other places, black money is not too much. You also need to understand that there are places where black money is invested a lot, and that's in real estate. Land and buildings are where the black money is invested. Okay, so that is one major point of concern. Therefore, just for that, the government changed this law. Otherwise, it was 12.5% without indexation. So now we'll discuss the matter in short. See, like this. If you did the transaction before 23 July, then it's 20% tax like before. Indexation benefit will be there. If you did a transaction after 23 July, so the indexation benefit is now terminated and will not be available. 12.5% tax will be given. Okay, but if it is about land or a building purchased before 23rd July, before 23 July 2024, it was sold after 23 July 2024. So the government is saying that both the old law and the new law should be used to calculate the tax. And whichever tax is lower, take that one. Okay, now. So now one thing will come to my mind, that which income will be considered for capital gains, will it be according to the old law or the new law? So the capital gain will be calculated according to the new law. But there will be two ways to take out the tax. This government just ruins that all. You have to study so much, It is like that we do anything and it will do as it wants. Let the government take less or more tax, but not make it complicated. In so much complications, the student gets upset. Do you understand what I said? The income is also coming out differently both ways. So to calculate the tax, we need to calculate the income first, right? So the income will be different in both the ways, like a property worth 1 crore was sold for 2 crore. And applying indexation, let's say a property worth 1 crore after applying indexation becomes 1 crore 90 lakhs. Okay, so how much will be our profit? It is 10 lakh rupees. But if we take it without indexation, then from this 2 crore rupees, we'll subtract 1 crore rupees. That gives a profit of 1 crore. So the capital gain will be called 1 crore or will be called 10 lakh rupees. So the government is saying that the capital gain which will be called without indexation. But on that, there will be two ways to calculate the tax. Whichever you like, you can choose. Capital gains will be calculated without indexation. We are giving two options to calculate the tax. I know you might be having trouble. That's why we'll do practical questions. That's the whole reason behind my amendment class. This is the fun to be had, so let's see. See, this is also very important. Because you also know that recent amendments and changes that happen are asked in the exam just to see if the student is updated or not. Okay? So this example that we are doing, understand these are exactly the questions that can come in the exam. Yes. What I am writing now, exactly, this is the same question printed that can come in the exam. Okay, all right. Land purchased on 25/10/2020. 15 lakh rupees. Okay. Sold on 29/2020. 25 lakh rupees. Other sources income. 4 lakh rupees. Okay. Compute. Capital gain. Total income and taxes. Calculate capital gain, calculate total income, calculate taxes. Okay, we'll do that. First, I need to see whether it will be long term or short term on the land. Now, long term, short term. What do we need to do to see in land and building? Was there any change in the holding period for short term or long term? If not, then that change came in third category. So for land, what should the holding period be? Okay, this is 2024 sold. How long should be holding period? Tell me. It should be 2 years. So roughly you can say it's a little less than 4 years. And my holding period is more than 2 years. So it will be long term. We'll do the solution. Long term capital gain sale. consideration. You should also write with me as you have to present like this in exam. So the presentation should also come, right? 25 lakh rupees. We will deduct the cost of acquisition from this. All right. Can we also do the indexed cost of acquisition? No, my students, there are only two ways to calculate capital gains. Okay? The opposition party had a problem with the taxes, so the government created two ways to collect taxes. It said do what is less. Okay? But the income calculation method did not change. Income calculated in same way. How much is cost of acquisition? 15 lakh rupees. So how much will the capital gain be? 10 lakh rupees. Okay? In this we now add the income from other sources. How much from other sources? 4 lakh rupees. How much is this? 14 lakh rupees. Okay. This is our total gross income. There are no deductions. So this is our total income. Okay. Now we'll deduct the tax. Tax on it. The 4 lakh rupees income from other sources is not subject to income tax on the first 3 lakh rupees. Then on the next 1 lakh rupees, there's 5% tax. So on 1 lakh rupees from other sources, there will be 50% tax. Now there are two ways each to calculate capital gains tax. Okay. So now what will we do? We will go to the working note. Okay. And in that working note, we'll calculate the tax from both options. And the tax that we think is good, we will write that tax above. Did you understand? Now come to the working note, write option 1. Write option 1 20% with indexation. So if you want to do it with indexation, then do it with indexation. The government is not stopping you. They are saying they are very good in this. And who's better than them? Sale consideration. 25 lakhs. Minus indexed cost of acquisition. ICOA indexed cost of acquisition. 15 lakh rupees. Into. The index for the current year is 363 as I already told you. Okay. Then in which previous year was it purchased? In 2021. What is the index for 2021? The previous year. Just take a look. All right. Do you have to remember for the year 2021? No, you don't have to remember it for the exam. All of the indexes that are there will be given in your paper. Okay. 301. Calculate how much is coming. 18 lakh 8,970 rupees. So students, how much is capital gain? It has become 6,91,030 rupees. Tax. It is at the rate of 20%. This has become 1,38,206. If we take the indexation benefit, then the tax will be 1,38,206 rupees. Okay? If we don't take it, then we can also see that if we don't take, then it is something what the opposition party has done. Who did the option 1? It was done by opposition party. What option did the government bring? Option 2. Okay, let's see what is the benefit we get from this. So option 2. 12.5% without indexation. So, sale. 25 lakhs. From this, the cost of acquisition will be deducted. 15 lakhs. 10 lakh rupees became LTCG. And tax has become on this at the rate of 12.5%. So how much? 1,25,000. Any problem till here? No, there should not be any problem. 1,50,000 rupees is the tax made. How much tax would you like to pay? 1,38,206 rupees? Or 1,25,000? So here you would prefer to give 1,25,000 rupees, right? So tell me tax on it. On LTCG. Okay, that's fine. On LTCG 1,25,000 rupees. Okay, on other sources. Okay, 0 to 3 lakhs, nil. And from 3 lakh to 4 lakh, you should write it nicely. Write 3 lakh 1 rupee. Don't make me work so hard. Okay? At the rate of 5%. 5,000. It came out 5,000. Okay, this is 1,30,000. Is it enough or shall we complete it and show you? Add at the rate of 4% to health and education. So upon calculation, this would come around as 5,200 rupees. So this becomes 1,35,200. This is tax payable. How many of you enjoyed? Tell me quickly. Let me tell you if you like this example. Okay, and you also think this has cleared the concept very well about the capital gain and capital gain tax. Both points, which were written in the law, were explained very well through an example. And you know, when a new law comes, you won't find any questions in the market. It won't be available because when it's not printed in any book, then how? Okay? It's only when the people like us will create, then it will be printed in some book. This is created for the first time only. Look, a new law has come. There is nothing in market at all. Okay? So, if you feel that you should appreciate me for this question, then please do appreciate me in the comment box. Okay? Now come on, let me show you another example. Now you can do any question you want, I know. Okay? I don't need to do 10, 20, 25, 50. Just target that one in which everything is finished in one go. Okay, then just tell me. Here if we would say that the land is purchased on 29/24 and it is sold on 25/10/26. Okay? So what rate will the tax be applied at? On this, what tax rate will be applied? Will this option be available? No, this option will not be available. See this. When was the option thing in case of land and building? When it was purchased before 23 July 2024. So was it purchased before 23 July 2024? No. Okay. So how will this be solved? Since the land is purchased, I am writing this for you since the land has been purchased prior to, no, let me check. It is purchased after 23/7/24. Okay. Therefore, long-term capital gain will be taxable at the rate of 12.5% without indexation. There isn't much of a story in this. 12.5% of tax is paid without indexation. Okay. Actually, you see, this government doesn't listen from the opposition. I'm telling you this one thing truthfully. Okay. To some extent, I also agree that there is a bit of a monopoly of this government. What has been decided is decided. Okay. The government is actually operating by itself in the way it wants to. Okay. Otherwise, if they were going to make a change, they would have done it for future as well. Now, what is it? That if someone buys after 23 July, they'll not have this problem of land and building. Obviously, in that case too, the problem is same. The problem that was happening while selling old land of tax. So that will be today also. But the government said they'll leave the old one as it is, and the new one will remain like that. Actually, you see, there are many things. No human being in the world can make every 140 crore people happy. You have to understand this too. Okay? People also want simplification of taxes, don't they? Yes, they need. People are saying that there should be taxes simplification, need to remove that fuss of indexation and all. Actually, the government is now trying to make that tax. It is trying to make that tax, which has the whole law inside 50 to 100 pages. Just that. It is like the law should not be that complicated and lengthy. Right. So therefore, we'll have to remove all these things. And the government says that it will remove all the exemptions and all the deductions. Indexation benefits will be removed and all complex calculations will be removed. A very simple flat rate will be kept for taxes. And the calculation will be very easy. Right? The second important thing is that the government is working on the AIS, the Annual Information System. Do you know what this is? It means that your income is no longer hidden from the government. Okay? Meaning the government knows everything that you are earning. The annual information return shows all my information about transactions I made with a credit card throughout the year. Okay? So you understand like this. Let's say I'm showing my income for the year 10 lakhs. Okay? And see this. So when we look at the year, what does the government know? When we log into our income tax, all the details are available there. Okay, how are the details available? Is the government receiving all the information like my PAN card, etc.? Yes, it has. Okay, and we see that it's clearly visible that I made a single swipe of 12 lakh rupees in Dubai. The government is surprised to see that I swiped 12 lakh rupees in a single swipe on my credit card and I say I earn only 10 lakh rupees in a year. Now we get an income tax notice. That means the government has all the information. On a roughly estimation, what it does is it shows my total income that is calculated. So first of all, we see that the government knows how much, right? Okay, so the government knowing this much, so this has to be shown. The rest, if there's anything, then obviously that has to be shown. Are you getting my point? So the government knows my expenses. I have all the receipts, TDS is being deducted on them. Does the government know that too? Yes, they know that. An interest is being received or someone is making payment is done deducting TDS and all that information is with government. And the government is also showing us that. Actually, what is the government doing? This, the EIS that has been created, this was just created only to scare you. Okay, when we see it, then we know that the government knows everything, so I have to accordingly show my income. Right. You know what's going to happen next will completely shock you. Okay? The government has already given this task to tech companies using artificial intelligence. They will be able to track our income from social media and other sources. For example, let's say there is a person who shows that his yearly income is 20 lakh rupees. Okay? And what does that person do is? He posts a selfie on Facebook like this. Okay? The caption says that he is in this hotel in Switzerland. Okay? So what will automatic AI do is it will calculate the daily expense of that hotel. It will say his expense of one day is 5 lakh rupees. How can a person who earns 25 lakhs a year spend 5 lakh rupees in a day? Right? So you should know that what kind of activities the government will be using to calculate your total income. Right? And all that will be shown to you. It will be shown in your income tax log so you can see what you had got. Understood. Let's leave all this talk aside. Therefore, the government is saying that they will find out the income and they'll take a very simplified tax from you. You'll calculate the tax on your income yourself very quickly. There's no need to calculate extra. It's like that. Moving ahead. From the transfer of other capital assets, for example, jewelry, etc., how much would it be? 12.5% without indexation. This point was only for land and building, which was the option given to us. Okay. Long-term capital gain arising from the transfer of unlisted shares, or shares of a company in which the public are not substantially interested by non-resident. This was for non-residents. Okay. There aren't many questions on this that come in exam. Still, take a look. Long-term capital gains of the unlisted securities is received by non-resident. Previously, it was 10% without indexation and it is 12.5% without indexation. This didn't need a lot of hard work, right? Do you understand? Long-term capital gain unlisted securities. Like we can say that, think of it this way, an investor from Dubai buys shares of Study at Home Private Limited. Okay. And they were unlisted shares. If he sold it before July 23 and made a profit, how much did he pay? Previously, he paid 10% tax. Now he will pay 12.5% tax. 10% without indexation and foreign currency fluctuation. Understand it like this, that for the non-residents, the taxation criteria was different. If you remember, you will know that previously we used to convert it. Whenever that non-resident used to bring foreign currency to India and invest in Indian currency, how do we calculate the tax? What do we do first with the sale consideration? We put sale consideration into foreign currency, the same foreign currency that he brought in. Okay, we put everything means his cost of acquisition, etc. in foreign currency. Then, the capital gain that comes, it comes in foreign currency. We convert it into Indian currency. We do this, right? From that, the impact of exchange fluctuation also goes away. Okay, look, the government cannot anyways take tax on the impact of exchange fluctuation. Otherwise, the non-resident will make fun of our government. And why? Understand like this. Imagine a non-resident brought $1 and bought one share. When he brought $1, the rate of $1 was 80 rupees at that time. He bought a share for 80 rupees. Okay. When he sold the share, okay, How much rupees did it cost? It costed 90 rupees. Okay, so he got 90 rupees. But when he converted it into dollars, how much was rate of $1 at that time? $1 was worth 90 rupees. Okay, did the one who came from outside earn anything? No, he didn't earn anything. Listen to my words again. He came with $1. What was rate of $1 at that time? 80 rupees. Bought one share for 80 rupees. Share's price increased. How much did it become? 90 rupees. Then he sold share at 90 rupees. And from that 90 rupees, he took his dollars back because that foreign man had come with dollars. Right. But at that time, the dollar's rate had become 90 rupees. He got $1 for 90 rupees. He came with $1 and left with $1. Tell me if the government is asking for tax because he has earned. He will say, you people are excessive and your rupee is becoming weaker. Okay, and on top of that, you need tax as well. Did you understand? So government removes the impact of foreign exchange fluctuation, and if there is profit, then it takes tax on that profit. And it is also necessary. Right? Come, let us see further. 112A. Now. 112A. It is about STT paid long-term capital gain. About STT paid. On what does STT apply? Equity shares, equity-oriented mutual funds. And unit of business trust. What is unit of business trust? This is a mutual fund company that is established under trust deed. Mutual fund established under trust deed. Okay? And these people, broadly speaking, invest all their money in equity shares. Okay? These mutual fund companies, they are incorporated like companies. And through the trust deed, meaning they are incorporated like trust. Okay? Although it's not much relevant for you. And if you understand just equity-oriented mutual fund, then also your work is also done. Okay? Trust deed, etc. aren't much talked about in exam. I have explained. So, in equity shares and equity-oriented mutual funds, what is the tax on long-term capital gains? Earlier it was 10% on long-term capital gain. And now how much has it become? 12.5%. And the government has also increased the exemption limit from 1 lakh to 1.25 lakh. They made it 1.25 lakh for entire financial year. Means for the previous year. 2024-2025. Previously, how much was it in 2023-24? 1 lakh's exemption, and now that exemption is 1,25,000. So whatever you earned above 1,25,000. On that, you will get this exemption. Okay, now. Which exemption? If I have sold some shares before 23 July 2024 and some after 23 July 2024, will there be 1.25 lakhs exemption before and 1.25 lakhs exemption after? No, it is combined aggregate exemption of 1.25 lakhs. Did you understand? And all of this together gives an aggregate exemption of 1.25 lakhs. Right? Now 1.5 lakh rupees exemption can be taken. You will calculate the total long-term capital gain. From that, you will take an exemption of 1,25,000 rupees. In case of equity shares, both at the time of acquisition and transfer. Okay, what is the condition for this benefit? What was the tax rate otherwise? You know that otherwise the tax rate was 20%. In 112A, it used to be 10%. There is also a condition that the condition for availing the benefit of concessional rate is that securities transaction tax should have been paid. STT should be paid. In the case of equity shares, when should the STT be paid? Both at the time of acquisition and transfer. In the equity share case, at the time of purchasing and selling the shares, STT should be paid at both times. Do you know when the STT arrived in our country? Securities transaction tax started on 1st October 2004. Okay, STT was introduced. Meaning STT did not apply at all before 1st October 2004. Tell me one thing, we bought shares from the stock exchange before 1st October 2004, where STT is applicable. But if we bought before 1st of October 2004 from stock exchange, would STT have been levied? STT had not even arrived in our country. This tax did not even exist. When was this tax created? On 1st October 2004. Means if we bought any share before 1st October 2004 from the stock exchange, would STT have been levied? No. So if we sell that share today, so will we get the benefit on that? This 10%, 12.5%, will we get all these benefits? No, we will not get this particular benefit. Okay, if we won't get it, then what will happen? How much tax will be levied? Even then also, how much tax will be levied? The tax will be 12.5% only. tax will be only 12.5% because now the tax has become only 1, right? Now there is only one tax rate. Earlier it was like rate of 10% in 112A. And how much is it in 112? It's 20%. Now in both 112A and in 112, how much is the tax rate? 12.5%. Tax will only be 12.5%. Even if we don't get benefit, then also how much tax was levied? 12.5%. But then what difference will it make? The 1.25 lakh rupees exemption will not be given. In 112A, there's also exemption of 1.25 lakh rupees. Income up to 1,25,000 rupees is not taxed. Beyond that, tax is applicable. Meaning, let's suppose we earn 1.5 lakh rupees under section 112A. Tax won't apply on 1.5 lakhs, but on 25,000, there's exemption on 1,25,000 rupees. But in section 112, that exemption is not there. Okay? So, I hope you understand this point that if shares were purchased, let's do it like this. Case 1, we will explain purchase date, sale date. Okay? In the case of listed shares, we are explaining. In the case of listed shares, we will mention purchase date and sale date. And so, now we will mention what will the tax rate be. Okay? Will exemption be given or not? You will mention that. It was bought on 1st September 2004. It was sold. It was bought on 1st September 2004. It was sold by you. Case 1. This is also a very good example, students. Note it down very carefully. You are selling on 15th June 2024. Was STT paid at the time of purchase? No. STT came into effect on October 1st, 2004. We did not pay STT at time of purchase. So that benefit will not be available to us. Okay? If we will not get the benefit of section 112A because it is not there in section 112A. If it is not in section 112A, then what will happen? If it's not there in 112A, then what will happen? So do you know what was the rate before the 23rd of July? 20% was the tax rate. So our rate will become 20%. Exemption? No. So isn't this quite exciting and seems interesting? Take one more example. V. Purchased on 1st September 2004. Okay, it was sold on 20th October 2024. At time of purchase, STT was not paid. Now STT was not paid, so that means we are out of section 112A. It became STT not paid case. We left 112A. We left 112A. So we came to 112. In 112, if it was sold by 23rd July, I mean share was sold before 23rd July. Then it is 20%, and if not, then how much after that? 12.5%. We have come to 12.5%, but the exemption will not be available because we are paying tax under 112 and not under 112A. So, should I discuss this further? You are enjoying it very much. Second, let's assume that you people made purchase on 20th September 2020. Okay? You sold the shares on 15th of June 2024. Was STT paid on both sides? Yes, it was paid. We arrived in 112A. But if they were sold before 23rd July, then the tax rate was 10%. What is the exemption amount? 1.25 lakh. Nicely done. Case 4. You purchased it on 20th September 2020. When did you sell? On 20th October 2024, that is, you are selling after 23rd July. How much will the tax rate become? Now it has become 12.5%. But you are paying tax only under section 112A, right? So will exemption be given? Yes. It will be 1.25 lakh rupees. These 4 cases are possible. All 4 are written down. If this much is in mind, then nothing will go wrong. Is that clear? Okay. Come, let us see further. Unit of equity-oriented mutual fund. It's saying that if it is an equity-oriented mutual fund. So, what happens here is, to take the benefit of section 112A just at the time of selling, If at the time of selling you have paid STT, then also the work will be done, and at the time of buying there is no need to pay STT. Meaning, what will happen here? In the example, what were we doing repeatedly? We were taking purchase date as 1st September 2004. Okay? In this case also you will fall under 112A if this is a case of equity-oriented mutual fund. This was the case of a listed share, please keep that in mind. Then this difference was there. Okay? In the case of mutual funds, in the case of equity-oriented mutual funds, even if you have paid STT only at the time of sale, then also the work is done, there's no tension. If STT is paid at the time of sale, your work is done. Okay, clear? That is in the first case and second case also. If we talk about equity-oriented mutual funds, then we will give tax under which section? Under section 112A. Let's talk about short-term capital gain. Let me briefly explain what happens in short-term capital gain first. Like I explained in long-term capital gain. What did I explain? If you see, earlier without indexation it was 20. With indexation, how much was it? So, it was 10. Both were merged to make it 12.5. So what has been done now? In short-term capital gain, earlier 15% was there. There was slab rate. Okay. In the STT paid case, it was 15%. In the STT not paid case, the slab rate was there. STT not paid. Okay. How much the one with 15% became? One with 15% became 20%. And how much did it become? This remained as slab rate. Okay, 1 with 15% became 20%. And slab rate remained as slab rate, so there was not a lot of change. In capital gain, there are two rates now. 12.5% for long term, and for short term, it is 20%. Has the government increased or decreased the tax rate? It's increased. 15 became 20. And in long term also it has increased. 1 with 10 became how much? 12.5. And wherever government changed from 20 to 12.5, it removed indexation, right? Ultimately, the tax has been increased. Okay. Let's proceed. Look, what is written? Short-term capital gain on transfer of equity shares in a company unit of equity-oriented fund. What is the condition for availing the benefit? It is written that sale of such equity share or unit should have entered into. After this. Sale should happen after this. Okay? Basically, the sale must have happened in the current year. Okay? And when does short-term capital gain happen? It happens at 12 months only. Short-term capital gain happens at 12 months. So when was it purchased? It must have been purchased only 1 year ago. So now it must have been purchased only after 2004. So shall I tell you the whole story in this? Whether it was purchased before 2004 or not. If it was purchased before 2004, then it will go into long term. It cannot be short term. So I will not tell this whole story in this. Okay? Instead of this long story, just don't say anything. You directly say STT paid, just that. Why should we say all this? When it was bought, when it was sold, it does not matter. Okay? What matters is the rate it is sold at. Okay? What's given? Before the 23rd of July. 15% until the 22 of July, after that 20%. Shall I give you an example on this too? You will say, sir, this is what we sit in your class to do. Otherwise, what is the fun? What is different? This is what is different. That you will get examples on all the new amendments in this class. Purchase of share of A Limited. It's listed. Okay? On 4th October 2023. Okay? Sale of shares of A Limited listed. On 15th June 2024. Then purchase of share of B Limited listed. 5th November 2023. Sale of share of B Limited listed. 10th October 2024. It's bought for 3 lakh rupees. It was sold for 5 lakh rupees. It was bought for 4 lakh rupees. And sold for 6.5 lakh rupees. Other sources income. 4 lakh rupees. Calculate total income and tax. Look at how it's calculated. Here you just have to look at transaction before 23rd July and after 23rd July. So this is before 23rd July, this is after 23rd July. Okay? We will write in short-term capital gain. Prior to 23rd July 2024. Okay. Sale 5 lakh rupees minus cost of acquisition. Is it 3 lakh rupees? This will be 2 lakh rupees. Okay, then after that. On or after 23rd July 2024. Sale 6,50,000 minus cost of acquisition 4 lakhs 2,50,000. This will be 4,50,000 rupees short-term capital gain. Now add other sources to this. 4 lakh rupees for other sources. In total, it became 8,50,000 rupees. This is gross total income, but without deductions, etc. I have directly written the total income here. Now we calculate tax. Tax on it. STCG, which is of 2 lakh rupees, it's the first one. At that time, what was the tax rate earlier? 15%. So write at the rate of 15%. Okay? And there's this STCG. This is one with 2.5 lakhs. 2,50,000. On this, the rate will be how much? 20%. Okay? Balance from other sources is 4 lakhs. 3 lakhs will be exempted and tax will be levied on 1 lakh at rate of 5%. Other 1 lakh at the rate of 5%. This became 30,000 rupees tax. This became 50,000 rupees tax. This became 5,000 rupees. How much tax is it? 80 plus 5 is 85, so 85,000. Plus health and education, add it at the rate of 4%. This will be 3,400. 88,400. Tax payable. Okay? Right? This also became clear. What's written after this? Computation of tax on long-term capital gain on transfer of land or building or both. After 23rd July 2024. After 23rd July 2024, how the computation of capital gain will happen? That will be computed like this. Sale consideration minus cost of acquisition. There are two methods for calculating tax. Same has been clarified in law in section 112. So pay attention. They have explained two methods for calculating tax. How much with indexation? With indexation, how much is it? With indexation, it is 20%. And without indexation, 12.5%. But if you are computing this, if you are computing capital gain, then how is it done? It's done without indexation. Okay? Thus, for computing income under the head capital gains to be included in gross total income, indexation benefit is not to be given. Okay? Indexation benefit will not be given. So, I have already shown this to you in the computation. Okay, so there were so many amendments in capital gains. Now there are even more amendments. In next class, we will see the remaining amendments. We will end today's class here. We'll pause here.